first question you always get is, what are you going to pay me? What percent of UPB?
Yeah.
Well, if it depends on if you sold it to a lousy borrower at a low rate on a long term, what do you think you're going to get?
Yeah.
Right. But if you want to know, it's like, well, how do I write it if I want 95 cents on the dollar? It's like, so, there's a way to learn from all these people. I do want to say there's a lot of good stuff on social media, but there's a lot of stuff that's not accurate either. So back to my trust but verify. Make sure you're getting advice from somebody that knows what they're doing and not just some hot sports opinion in some Facebook chat.
Good afternoon. Dave Putz here from JKP Holdings. Alongside me, as always, Mr. Nathan Turner. What's up?
Hello. Good. We're chatting so much. We almost chatted right into our intro here.
Yes. Good conversation. That was always fun. But yeah, we're like, oh crap. So I'm glad to connect here with you guys. For those who are watching, tuning in, hopefully it's not your first time, but this will be recorded. It's probably our most asked question we get. So we've been doing a lot of things lately and kind of shifting gears. We're just talking to Bob, if you call it the green room, whatever you want to call it, about how the market's shifting and how that we just saw the fact that some non-performing loans in the Fannie level were trading at upper 90% of UPB. That's crazy. I mean, but they must have really cheap money or some game plan that you and I aren't playing yet.
Yeah, we're sitting here trying to figure out. So just trying to run some rough numbers based on what we know. How does that work? Like, even if your money's at 2%, margins are slim, but if you're talking hundreds of millions, maybe that makes it worth it.
And the mortgages are 3, 4, 5%, interest rates that to get a 10% return, you're discounting a lot. These guys are buying it almost at par. So it's crazy. So I apologize for over speaking some people, just finishing the conversation up, and hopefully those who are tuning in can understand the stuff. So what we've been doing a lot lately in the last 2023 has been a mission to understand the seller finance world, and also understand where notes are at, wrap notes, subject twos, owner financing, and just embed ourselves in those groups. And we just connected with another group this past week, had an awesome phone call with another group that does similar stuff. So stay tuned. We'll be hitting about a bunch of that stuff up. And in the coming weeks, we'll also have some reverse mortgage talk and some more people who've done from W-2 to owner financing. So it's be exciting.
Yeah, it's really cool. It speaks to kind of the variety within this niche. Yes. So we've got mortgage notes as kind of the umbrella, and then you're talking about reverse mortgages, seller finance, performing, non-performing, seconds, institutional versus seller finance, creative finance, wraps. There's so many different directions that this business goes that it makes it really fun and really interesting all the time. It also makes it really possible to be able to pivot at any given time. If we were doing non-performing for years, and now the pricing has just gotten so out of whack that it's hard for us to justify that direction. Where now seller finance performing notes become a much more attractive asset class.
Yeah, and it's funny because we talk about this a lot. I think people get a little confused because I still heard today someone mention, buying an ROI. Everything's really based on buying on that interest rate, right? That's the driving force behind all of this. It's really difficult for us to buy on a low interest rate situation. If you're originating a loan and you're listening to us, please don't write it 6%, right? If you can, if the borrower is able to do it. Again, if it's owner occupant only, if it's an investor, you can write whatever you want to write at. But for us to buy it, it has to be a large enough interest rate, or we're going to discount you based on the return we're looking for. So.
And it's still a question we get all the time, like just on this call this week. These are guys that have been doing this for a number of years. They're not brand new to this business. But the question we get is, what percentage of UPB? Well, it depends. What is your interest rate? And that was our first question back to them. Well, what's the interest rate? And that's the number one determining factor on what that discount's going to be. So write it at a high interest rate. You've got a smaller discount, and we can do a ton of business.
Yeah. And I think people get lost in that because they think other ways. And I don't know what the focus is on that is. Because it goes back to, oh, percentage UPB. It doesn't matter. ROI doesn't count. It's yield, IRR kind of equations. Yeah. And that's what we talked about. If the big pools are selling, they sell at a percentage of UPB because it's an easy number to use, but they're really looking at the interest rate and seeing what the return is, because your interest rate's your return, right? And you have to discount the principal enough on lower interest rates to get the interest back up, the return back up. If your interest rate's real low, you're gonna have to drop your discount on the balance alone to get that return. So
yeah, we're always looking at yields. So
yes,
learn how to use the financial calculator. Use Dave's wacky spreadsheet, but learn how it works.
Yeah, you got to use something.
Yeah.
If you have a question about that, feel free to reach out to us. Nathan used the manual calculator. We have some spreadsheet stuff, but either way you're doing it, make sure you understand what those numbers mean, how to use them, and what they mean, how do they interact with each other. That's a huge thing, right? And it's funny, we got in the space decade plus ago. We were focused on bank loans, and we still, we bought bank loans up to the most recent days. And we've shifted over to the seller finance, where the grandfathers of this, this investment strategy bought seller finance notes, flipped over to bank, and then flipped back, right? That's what they did for years. They focused on buying seller finance paper.
Yeah, and we're lucky enough to have one of the legends in the business. Bob's been around forever and ever. Well, I don't want to make him seem too old. We'll get him on here. He can tell us all.
Yeah, Bob, welcome, man. How are you?
I'm good, guys. Appreciate you having me. And Nathan, you caught yourself just in time about been around forever and so long, and the grandfather, and
yeah. So, Bob, for the few people who are tuning in, maybe there's 72 people who have been tuning into us. Who are you? How'd you get into real estate and notes? And keep it under 4 hours, because
yeah, well, if I went through every year, it would take 4 hours. But actually, my very first job out of college was consumer finance. So everybody should have to be a debt collector at some point in life. I always say you should be a debt collector and work in a fast food restaurant. As long as you've done those two things in your life, you'll appreciate whatever other job you end up getting. So that started off in the real estate, and then I was in the banking world. 1990, I entered the seller finance space, as you mentioned. I went to work for Metropolitan Mortgage out of Spokane, Washington. At the time, they were the big dog in town, and worked with them. In 1997, we moved to Dallas to work at the Associates, which was, again, another big firm. And then in 2001, I went to work for Bayview, and a lot of folks probably have heard of Bayview, and I worked with them for 12 years. And then I came over with Colonial Funding Group and Eddie Speed, and we started our capital fund in 2013. And we, like you said, we've been in the seller finance space for over 30 years. We have bought bank paper, we bought deals from hedge funds, and but our true core is still seller financing.
Has seller finance changed over the years, or is it just evolving? What have you seen?
That's a great question. I don't know that it's really changed a whole lot, other than to your point a minute ago about a lot more sub-twos and wraps. We'll say quote unquote professional seller financiers as opposed to just mom and pops. Back when I started in 1990, it was, you would find somebody who had one property and sold it and have one note, and that was it. And obviously, it was much more important to find folks that were generating multiple notes, so you had, lower marketing costs. So, you'd find somebody who would buy property, fix it up, do some rehab, build a portfolio of that type of property, and then buy in bulk. So, but it's crazy. We were talking before we jumped on about interest rates and cost of funds and stuff, and interest rates now are pushing 8%. We still see somebody do a seller finance note at 6%. I'm like, why are you doing it less than the bank will do it? Just, that's not the thing. So it's always been a really good access to private capital for folks that either don't want to or can't get bank or traditional financing.
I remember back in my university days, I took business, and we were talking about pricing, about, you know, pricing whatever goods you've got or whatever. And the line that stuck out and kind of became sort of a legendary quote was, "Don't try to compete with Walmart. You're never going to undercut Walmart." And we're seeing people doing that now, where they're trying to compete with Walmart with the banks. Like, no. The banks are offering what they're offering. You've got a premium product. So charge more.
Yeah. So when you've gone through this process of buying it, what are kind of some of the stumbles that maybe people who are watching, who are creating it, who've been in the space maybe a year or two, that you've seen that you say, don't do this kind of stuff with originating notes?
Don't go after the broken, desperate person to be your borrower. Right? I mean, there are a lot of, and we refer to them, you know, on the note school side as like penalty box buyers. In other words, there's nothing wrong with them, but the credit availability right now is so tight in the underwriting, and the rates are higher, people can't qualify. There's well-deserving borrowers out there that can be homeowners. You don't have to chase somebody with a low down payment that can barely afford to make their monthly payment. You don't have to market to those people. So if you're creating notes, find good quality borrowers. You know, to your point earlier, if you're creating a note to sell it, right, you want to find a good borrower, and you want to write it at the right terms so you can minimize your discount, right? Yep. And, you know, you guys were talking about percent of UPV, and, you know, it's all about the yield. I do want to just, you know, differ a little bit on that, because there is some opportunities, especially in the reperforming space, where you got a low rate and a long term. And, you know, all right, well, all of a sudden you're going to get a huge discount. So you got to balance discount with yields. We'll buy below our yield requirements at times if we know we're buying a big enough deal and we got like an 80, 90, $100,000 discount. That loan pays off in 5, 6, 7 years, your yield's going to jack up anyway. So we always try to balance that discount in there, which really comes into effect on, you know, deals over 150, 200,000. All of a sudden, then you got a good sized discount, even if you're buying at a high single digit yield. Yeah,
because most time people don't go 30 years, right? You have a exit in 10 years, your yield just goes through the roof. You're absolutely right there. Yeah, exactly. Well said. So note school, right? This is something we've all heard about. I think, Nathan, you went through it years ago. Tell us a little about, for those who are familiar with it, what is note school?
Well, let me step back just a little bit. When I first started in 1990, I met Eddie Speed when I was working at Metropolitan Mortgage. And Eddie was, you know, a loan trader. He was a broker. He would buy for his own portfolio, and he would sell to institutional investors like Metropolitan and then Associates. When I moved here to Texas, his office was pretty much right down the street. So I got to know Eddie real well, and you know, he developed all kinds of seller finance programs for companies like Home Investors, how to create notes that institutional investors like Bayview would buy. And from that, he created No School as an educational piece, initially to teach people how to find notes so they would send it to him, so he would have a continuous marketing source, right? And they can make fee income and so forth. And that's grown to an educational platform where mainly somebody who, let's say, has a corporate job, maybe they're looking to exit that and they have money in their 401k or in their self-directed IRA, and they're looking for a retirement. They're looking to invest in passive income. And it's evolved over the years to creative financing and MPLs and that kind of stuff. But it's basically how to, you know, build up a passive investment portfolio. And No School's probably been around 20 years now. So that was Eddie's baby when it started, and he still promotes that and does 3-day classes and teaches a lot of people across the country how to buy assets and partials and so forth. Let me tell you a real quick story on partials. So when Eddie first started, he worked for his wife Martha's dad and his business partner in Mississippi, and they were buying and selling notes. Well, they were selling notes to a finance company down there, and they would go to the company, and it would be a 30-year note, and the company would say, we can't buy that note because our machine, it was before computers or however they tracked it, would only go 15 years. So they were like, okay, well, we'll just say part of the note then. And that's really how the whole partial thing, they would buy the whole note and only sell part of it because the Finance America couldn't figure out how to amortize something more than 180 months. So, you know, and now all of a sudden, you know, you guys are morphed into partials, and that's a great way to, you know, to your point on some of the lower rate stuff, to hide the discount is, you know, you got a 6% 30-year note. Well, all right, well, I'll buy the next 10 years and it'll revert back to you after that. And, you know, it's a win-win. They get capital back and you get a good cash flow for a period of time.
Yeah, that's amazing.
Awesome. Yeah, Eddie's was the very first class I took back in 2009. Wow. I was looking up, we were creating notes. I didn't even know that's what they were called. And we were looking for an outlet, looking for some way to resell these, some way to capitalize. That my thinking was, you can sell a turnkey rental. Surely you can do that with what we're doing, whatever it is that's called. So I found Eddie online somewhere and went down and took his class, and blew my mind. You know, all of a sudden I started realizing this is a bigger thing. Went to later that year, went to Noteworthy down in New Orleans, and again blew my mind as Eddie was there again, and just there's 200 people all talking about what I was doing, and that was kind of that introduction. Oh wow, this is really a thing.
So when you
had mentioned earlier about all the different niches in the note space, you know, and the ability to pivot. And you know, I think that's key, and that's one of the themes that we're going to have at Note Expo this year, is just in the ever-changing market. You know, are you ready to pivot? The only, you know, my only word of caution on that is there's a difference between being prepared to pivot and then just being chasing shiny objects. Right? So sometimes you got to stay focused on what's working in the market right now, and not dabble too much in 18 different things. But on the other hand, when the lead comes to your desk, you need to know, am I going to flip this loan and make a fee? Am I going to buy a partial on it? Am I going to, you know, you got to be able to do something, because we're all spending money on marketing, whether we're doing something like this and talking about business and, hey, send me deals, or if you're looking to buy, let me know, or, you know, that kind of stuff. So I would say be ready to pivot, but also stay focused on, you know, what your core business is. And in our case, it's always been seller finance.
Yeah. Are you guys buying wraps at all? Are you guys getting into that space, buying wraps? We've talked about it a lot. It's definitely a hot market for the creators, but wrap notes don't seem to be fitting in well with the note buyer if we can't pay off the underlying lien.
Yeah, well, if you don't pay off the underlying lien, you're technically in second position, right? So that limits the investor pool, people that are comfortable doing that. We buy wraps, but most of the time we do require to pay off the underlying debt, because we do want to be in first lien position. Unless there's just such crazy, you know, equity, or we love the property, or, you know, it's an outlier. But our basic stance is, you know, hey, you bought a house for this, you wrapped it, you know, we'll buy that note, you'll make, you know, whatever we pay off, you'll make that spread, and, you know, get your capital back and go do your next deal. So we usually require the underlying to be paid off.
So Note Expo, I believe, was one of the first conferences I went to. And I believe, weirdly enough, I think you were one of the first people I met. You probably didn't realize it. I was sitting with a buddy of mine, and he introduced us. And one thing I want to make sure people realize is these note conferences, who are very nervous about going. Me and Ethan talked to a lot of people before his last year, and we heard from those people who listened to us and talked to us that their nervousness was a 10 for some of them. Once they got there, it dropped from a 10 to a 0. Talk a little bit about how note conferences, for those who may be new or just getting into it, is not as a stuffy atmosphere as some may think.
It's not at all intimidating, but go ahead, Bob.
Yeah, no, and we try to make that environment so that it's not, right? I mean, if the only conference you ever went to was like an MBA conference or something, then, you know, that's, you got your suit on and you're meeting with a bunch of bankers, and I can tell how, you know, there's 2,000 people there, and you might feel a little intimidated. But we started Note Expo. This will actually be our 10th annual Note Expo. And we wanted to create an environment where not only do we have quality content, whether it's general sessions, panel discussions, whatever, but we have a community where you can connect with people, whether it's new or reconnect. I may only get to see you guys a couple of times a year, and it's usually at a conference, right?
Yep.
I mean, I used to see Nathan all the time at an IMN conference, and then when he took over DME, I was at DME, and he's been to Note Expo, and but honestly, I don't make my way to Western Canada very often, so I don't get to see him, and so it's always a way to connect and reconnect. And also, to that point, we have about 25 to 30 exhibitors, so you get to see all the vendors that you deal with, right? And if you're new to the business, it gives you an opportunity to vet them in person. You can meet with different loan servicers, see what's a fit, different IRA companies, different BPO agents, whatever. So just that, and we've grown over the years. I think it's a solid product. When people come there, to your point, Dave, it's not like they feel like, oh my God, what have I got myself into? It's like, if you want to sit there and listen to everybody on stage all the time, you can do that. If you want to work your way through the exhibit hall all day and have meetings out in the lobby and, just connect with folks, you can do that too. So it's a pretty good environment. And I would not say it's intimidating at all. And I hope nobody feels that way.
Could you give us a little snapshot of what some of the topics, so the people who are looking or curious about going, maybe in tune for, or some things they can expect?
Yeah, I mean, it's stuff we've been talking about. We've got some creative finance presentations. We've got some topics on wraps. We've actually got some panels on distressed debt, raising capital, how to use self-directed IRA funds, in all those spaces. Do you buy an NPL in your self-directed IRA? There's people say absolutely not. There's people that say yes, you can if you do it correctly and you know what you're doing and things like that. So we've got some topics on that. And we also talk a lot, really just about the mindset of, we're all entrepreneurs in this note space, right? You get up, whether you go to an office like we have or whether you work out of your house, sometimes, you're dealing with people you've never met, whether it's a seller, whether it's your loan servicer, and you got to have that right mindset, because it can get frustrating. And, so sometimes we use it as a reset button, it's your pep rally once a year, come to the Note Expo and kind of get rejuvenated. And so we do a little bit of the, get out of your head and start, pull the trigger on some deals. Some people want to do deals and all they really do is window shop, right? They look at deals, but they haven't bought one yet. And they just need to get over that fear of, that first step.
Yeah, absolutely.
So we have, I'm not sure if Nathan saw it, Steve Thomas made a comment that if you're in the note business and you haven't been to a Note Expo, then you're not in the note business. Well said.
Appreciate that, Steve.
Yeah, so it's great to hear this stuff, and we collaborate all the time, right? Most people say, well, aren't you competing? We all are, right? But at the same time, we're all learning from each other. This space is different from most real estate, where the collaboration is really, really important and very, very helpful. So, let's back up here. I put it in the chat here too. Note Expo is the 3rd and 4th of next month, and it's in Dallas, right? Yeah. It's at a conference, it's in a hotel set up, and the exhibitors are outside, the conference inside, and they have speakers for 2 full days. So I would encourage you, if you're local to it, you have no excuse not to be there. And if you are a little bit a distance, I was bringing up this morning that it looks like I will be attending this year. So I'm looking forward to making sure you guys all get there. Nathan's flying in from Canada to go there. And it's about the networking, right? This is what the space is all about, is networking, finding how we can help each other and collaborate. As Bob said before, if a deal doesn't fit you, but you have a collaboration partner that does fit them, you pass it on them, they're going to pass you a deal back. So you make sure you can network for that availability. You have all these tools in your toolbox available.
If there's a secret sauce to this business, so at number one, you have to get educated. And whether that's through Note School or somewhere else, but make sure you know what you're doing, because this is not real estate. It's only related. That's all.
Yes.
So make sure you get some education. Next, though, the real secret sauce to this business is conferences.
Yep.
I started going in 2009. That was my first. And I go to several conferences a year. I'll go to 3 or 4 or 5, whatever is out there, mine or somebody else's, because it's so important to network. It is so important to talk to your vendors and just have that face-to-face conversation. Let them take you out for dinner and have real conversations about nothing to do with business and also to do with business. And you do all kinds of stuff with people that you have met and have, become friends with.
And then when you get to the stage like me that have been around forever, as Nathan said at the top, then you're fortunate enough to do business. I'm at a point now, honestly, I only do business with people I like to do business with.
Yeah.
Life's too short. I have a life's too short bucket. It's either, the person I'm dealing with or a deal when it comes across. Oh yeah, you might be able to make some money on it, but is it really worth all the hassle to do it? I just pass on it. Mm-hmm. But Dave, to your point about competitors, I always look at everybody as a counterparty as opposed to a competitor, because like you said, I'm going to have something and it may not fit what I do, but if I can pass it along to somebody, or a lot of people, I'm only comfortable because they came from a real estate background, investing in my neck of the woods, so to speak. Sure. Well, in an environment like Note Expo, you're able to network and have boots on the ground in other areas, right?
Yeah.
I met this guy and he lives in Michigan. He can help me out with that Detroit deal or that Kansas City deal or whatever. And I mean, if I ever get a note in Western Canada, I know who to call. Right? I mean, I'm looking, Nathan. I'm looking, but I haven't got one yet. But you just find out what people's, what their buy box is, what they like. You may have some loans and you need some capital. You may find somebody looking to buy a partial. Maybe they got a grandkid and they have a small IRA they need to build, so you sell them a small partial in that. So, one thing we really like is all our breaks, lunches, and happy hours are all right in the exhibit hall, right? And you sit there, you meet the vendors. We set up, I think, tables of 10 so that, you get to have lunch with people or some new folks. So, not to be the dead horse, but it is all about networking.
Yeah. And I encourage people, don't necessarily sit with people,
Yes.
Go ahead and sit somewhere where you don't know anybody, and it's real easy. I know it's really intimidated, but it's really easy. You just go down and, you find this table and there's one spot and you say, hey, is this seat taken?
Yes.
That's all it takes.
Yes.
That's all it takes. Yeah. It's really easy. Yeah. And you'll find, especially I've found in the note world, people are extremely friendly, and they're willing to share all kinds of information and knowledge with you. So.
And I challenge you, though, if you're going to these expos too, besides talk to someone you don't know, is follow up with the connection you do make. I can't tell you how many people go to conferences, exchange business cards, and never follow up. Yeah. I give them my cards to all the people, and I don't get an email, and I'm shocked. I encourage you guys. This is the keys to this business. You got to network. You got to talk to people. If they're a BPO agent, or if they live in, Michigan or wherever, just having their business card on file and reaching out to them and saying, hey, it was good talking to you means a lot. Right.
Yeah. So, the world has changed to some degrees as far as people not having business cards a lot of times. And it does make it difficult. And that's one of the reasons why conferences like ours and Nathan's have come up with, the on the phone where you can connect with people on the app. You can, connect with people after the event via the app still.
You should do it.
Capture people information. So don't get all freaked out if you don't have a business card or whatever. You still got
to
use the app and
but connect with people through the app, right? Don't just use it to have it. Make sure you follow up with them, talk to them afterwards. That app is not only active at the conference, it's also active afterwards. Yeah, absolutely. Well said, Bob.
And before, so you can set up meetings or whatever.
That's true.
Yep.
Yeah.
Extremely helpful.
So we're going to get into a little nitty gritty here. What is your thought process of the market of the note investing world right now? Where do you see things have turned? What are you guys are focusing on now? Are you guys doing anything different than you were 4 years ago, 5 years ago? Give us like a temperature gauge of what you see the note market being at your size.
Well, I think right now, one of the key things, if I had to put in one word, it would be leverage. There's a lot of people that are leveraged. Their cost of capital has changed. and they got to figure out a way to how to get rid of some of their product. It could be a small regional bank. It could be a mom and pop guy who's got 10 loans, but he's got, he borrowed money at prime plus whatever. And now, does anybody know what prime is today?
High, around.
Good question. I do have it, but yeah, go ahead. I'll look for it real quick.
Yeah, I mean, it's like 7 or 8. I mean, it's up there, right? So all of a sudden you went from 4% cost of funds to 10% cost of funds, or whatever it happens to be. And you have a lot of underlying lenders that are calling their loans due, and or not going to extend them, or the cost of funds going to go up, so they got to sell products. So we're seeing a lot of people that are, for lack of a better term, being forced to liquidate some assets that they probably wouldn't necessarily want to, in a world 2 years ago with basically 2% interest rates.
Yeah.
But now we're seeing a lot of that. So
it's amazing.
Some of it's seller finance, some of that institutional type hedge fund paper and things like that.
Yeah, I'm seeing 8.5 as of July, and just a year ago we were at 5.5. Yeah, so you're right.
And go back a year before that, and it was probably 2.5.
Yeah, yeah, it just drops dramatically, and you're absolutely right. Those people who planned on refining or whatever are stuck, right?
Well, we have a lot of people that not only invest in notes, but invest in deals like apartments, multifamily, right? So every syndication that I heard a pitch on in the last 3 or 4 years was, we're going to buy this deal, it's at a 4 cap, and we're going to value add, and then we're going to refi out in 4 years and pay everybody off. Well, that model for refi was not at 9, 10, 11%. That was refining out at 4.
Yeah.
Right? And what is the bank's going to do? They're either going to be a property owner, or they're going to have to figure out a way. Somebody's got to come to the table with some money to pay that loan down or so forth. So fortunately, like Nathan said earlier, we're not quote unquote real estate. We're just related to it.
Yeah.
So the paper side of it is a little bit better, and maybe not as sensitive to that. But there's a lot of funds that they use leverage too. And we've never used leverage in our fund.
Wow.
It's just, in my mind, it was phantom returns. It made it look like you were really blown and going, but that was all, how the numbers work when you use leverage. Sure. It just kind of increases.
It looks pretty.
Yeah, while the rates are low and everything's good. Yep.
Yeah, that's us too. We don't leverage anything.
Nope.
I'm just not comfortable with it.
Yeah.
Borrowing money on borrowed money? Nah.
No, I agree. People do it just so they can say they grew their fund.
Yeah.
They grew their fund to 50 million or whatever. Well, I think 20 is just fine if you can just raise the money and do whatever. So leverage, I think, is key, and affordability, just all across the board. Affordability helps create seller finance notes because you may not be able to qualify at the bank. But on the other hand, it also creates non-performing notes because people are having a hard time buying gas, buying groceries, making, it just makes it tough all the way around. And, affordability, you see, inflation's this, unemployment's that, and it's all a shell game. What's the real number is,
Yeah, Bob's getting to our final.
I go to the grocery store. I know what things cost.
Bob's getting to our final question before we get there, so we're going to hold that off for our final question, right? And I think you hit some really cool things there, and I think people are focused on trying to become Wall Street, right? That was a big focus. Let me grow, and become Wall Street, and you don't have to be. We both know someone who did that, and they got burnt out. It is extremely overwhelming dealing with all these borrowers and all the troubles and tribulations. And what most people don't realize, who may be in the space for 3 years, that everyone's paper right now is doing well. They didn't live through the non-performing world of you're foreclosing on most of your portfolio. And when that comes a fold, that's a lot to undertake. Foreclosing on multiple assets and juggling all the stuff. I don't know how some of the people do it. It's shocking. We did have a question, Gene. I think you touched on this before, Bob, but Gene asked the question is that he's heard of people buying non-performers over UPB. What are the cases to justify buying above the unpaid balance?
Well, number one, like we talked earlier, have a low cost of capital. But look, there's three factors when you're buying an NPL, right? You got BPO value, you got UPB, and then you got total legal balance. So if you are able to verify the total legal balance, because
what is total legal balance? Just for those who may not know, give me a quick definition of total legal balance.
That is the total amount that you're entitled to collect when that loan pays off or goes to foreclosure. So it could be accrued interest, it could be advances, foreclosure fees, anything that, whether it's the court or whoever happens to approve the foreclosure, the servicer usually says in order to pay off that loan, like, for example, let's say this loan was modified, okay, 5 or 6 years ago, and they did a deferment, they deferred principal. Well, the UPB may be 100 grand. There could be a $60,000 deferred principal that's due at the end. Well, that's part of your collectible balance.
Yeah.
Plus your accrued interest, plus your foreclosure fees and tax advances and so forth. So all of a sudden you may owe 100 grand, but you're entitled to $180,000, right? So if I bid 102 on 180, I'm over UPB, but I'm still, quick math, say 75% of what the total legal balance is. And to your point about back in the day, most properties were underwater, meaning they owed more than they were worth. Now there's a lot of equity there too, so the BPO may be up there. So we focus more on BPO and total legal balance than UPB. And that's why when you read that the Fannie trade that just happened was in the high 90s of UPB, it didn't disclose what the total legal balance was. I'm willing to bet that was probably high 70s of UPB. And I think the BPO was in the 50s. I think it has so much equity in there, if I remember looking at it. So that would be why. You do have to verify that, though. If somebody puts on the spreadsheet, hey, they owe me $188,000. Trust but verify, as my good friend Ronald Reagan once said.
Yeah, good example there. A lot of people forget about that total legal balance is collectible, and most sellers will expect you to be bidding based on that number because you can collect on it. Now, the hard part, like you said, is verifying it, because some people throw all kinds of stuff in there, and that's not collectible based on the agreement in the documents. So there's been many times where we've looked at that kind of stuff, and I've seen huge spreads in this stuff. And that comes back to the point, you need to verify. We saw loans where the UPB was 50 and the legal balance is 150,000. And I said, that just doesn't make sense. It just, that's ridiculous. So absolutely, I'd be verifying, talk to your servicer, talk to your seller, and just say, I want a list of the things that you're saying you are owed. And go through that. The servicer
should be able to also provide that payoff information.
Yeah,
and how they're doing. And to be honest with you, there could be some jurisdictions across the country where the judge is like, no, you can't have 10 years of accrued interest, and your foreclosure judgment is for X. And, so you just kind of, take everything and run it through your buying financial modeling and figure out what makes the most sense.
I've got one that's actually paying off next week, just to go along with this. So the unpaid balance is around 87,000. Total legal balance that we're getting paid off on is around 92. So there's about $5,000,
that makes
extra.
Sense.
And that's late fees, that's legal fees, that kind of thing that goes into that. And so that, $5,000, that makes a difference. That's
that a little extra juice for sure.
Yeah. And then you guys also buy bankruptcy notes and stuff like that. Do you guys like bankruptcy notes, or do you guys stay away from them?
I think Nathan summed it up earlier with his "it depends" answer on some questions. Cash flow and BK loans, we're okay with. Chapter, yes, we buy them. We don't chase them. If it's in a portfolio, we're gonna buy. We're gonna bid them. We'll bid them differently, obviously, than an RPL or an MPL, just depending on what it is. But we don't filter and say kick out all the BK loans or whatever. But we know folks who have models that all they want to buy is BK loans. We're not that guy either. But if you give me 20 loans and 2 of them are BK, then okay, as long as I get all 20 loans, I'll take the 2 BKs.
Yeah. And the BK loans will definitely juice your returns with the arrears for a period of time, depending on how long that period is. So let's get a more temperature gauge. What do you guys are more focused on right now? Are you guys buying more performing notes or non-performing? What are you guys seeing?
That's a good question. For a long time, we were buying a lot of reperforming loans. Right now, I would say seller finance performing loans is good. We do have a good pipeline of NPLs,
Okay.
but it's not as large as obviously we would like. Everybody thinks NPLs are sexy and I want them, and then when you start digging into them, the factor of how much hair they have on them, maybe it's like, well, I'm not that excited about it. So I would say we like cash flow, especially for those of you who think it's sexy to have a capital fund and so forth. And when we first started our fund, I think 2013, we were probably 70% NPLs.
Yeah.
And it didn't take long for us to figure out that we needed a much better blend of performing loans, because you got to have cash flow. You can't pay out returns on a negative cash flow NPL deal that's going to be resolved in a good way, but down the road.
Yeah.
So we blended it, and by the time our fund at its height was probably 70% performing, 30% NPLs, and we typically don't play a lot in the REO space. I mean, obviously, you have a non-performing loan, you foreclose, you end up with REO, and we'll usually sell or finance it if you just can't sell it retail. But we don't chase REO per se, and which you guys were talking earlier about reverse mortgages, and we're seeing a lot of HECMs.
Yep.
Really, it's an REO play. If you're not good at working your way out of REO, and for those of you that don't know, a reverse mortgage that we're seeing on the secondary market now is where the borrower is deceased and the property is vacant and supposedly secured. Okay, but there's not going to be any loan mod unless you might have an heir that thinks they are entitled to it and probate and all that kind of stuff. So you're going to end up with the property. Okay, well, Dave, you got somebody who lived in that house, had a reverse mortgage. They died when they were 85 years old, right? If you like shag carpet and avocado colored appliances, then we got a deal for you. I mean, they're going to, you know what these houses look like, right? I mean, my dad's 90 years old. When he passes away, I don't want anything to do with his house. It's just, it's got so much stuff in it from however many years he's been in there that I can only imagine what would happen. So it's, but if you're good at REO and you have boots on the ground and you know how to do it, it's a great play. It's just not our cup of tea.
Yeah, it's great for those looking for fix and flips, or typically want to buy at the foreclosure auction. If you're that kind of investor, listen to this. Reverse mortgages, when we have it on, is a great topic to learn about.
Yep, I agree.
Yeah, we'll be talking about that in the next couple of weeks, and I've done a bunch, and our guest has done a whole bunch, so that'll be a good discussion.
Yeah. So we've also touched upon hypothecations. Do you guys get involved in hypothecations much at all?
We've made some loans to folks against their note portfolios.
Okay.
Right. So for example, we'll lend up to 65% of the portfolio UPV, and 55% of the cash flow. Right. So in other words, let's say you have $1 million portfolio, you can borrow $650,000 and $10,000 a month cash flow. Your payment is going to be $5,500. Rough numbers like that. So that way there's enough cushion to where if there's some slippage in your portfolio, you can still debt service. And if if a loan pays off, you pay your loan down, and all that's built in. So we don't do a lot of one-off hypothecations. It's more on a portfolio level.
Yeah, absolutely. So for those who do have that kind of portfolio and you don't know Bob, which I'd be shocked, feel free to reach out to them. The link is inside the chat, it's pinned to the comment. Yeah, absolutely. So it's weird. We ran into, and I'm curious for you guys, this perspective that we've learned. We asked a lot of people at the Note Expo at DME last year this question. We're amazed how many seller finance people don't have a conference to go to. Have you guys learned the same thing? We're amazed that these people don't have a conference like we do.
It doesn't seem to be seller finance conferences.
Yeah. Have you ever seen one, or is
Do you
this?
know of any?
Not strictly for seller finance like that. No, I mean, I would say you can learn seller financing at Note Expo, at
Yeah.
Source, at DME, at Noteworthy, but it's all evolved in the whole note space in
So
general.
that's why I'm trying to convince them. Like, if you are in the seller finance and wraps and subject twos, come to the note conferences. We're in the same game as you are, right? So I'm amazed that you guys don't have subject to conferences or wrap conferences or owner finance or seller finance. There's social media, but there's nowhere to meet what other people do and what you're doing. I encourage you to reach out, go to Note Expo, DME, and Paper Source, and all the other ones, because we're in the same space you are. We're the husband and wife kind of situation, right? You guys are creating, we're buying. I encourage you guys to definitely take a look. Come out, meet us in Dallas in a month from now, and just learn from both people who are doing what you're doing already, but also the flip side of those who are looking to buy from you, and give you cash now so you can go buy more deals.
Yeah, I mean, you can find your capital source there. You also, like you said earlier, the vendors and service providers.
Very true.
You're going to create notes. You got to do it right. Whether that's, whether that's do it in compliance, or whether it's do it at the proper, note rate and term so you can exit at the number you're looking to exit at. So how to create a note. It was funny when you guys were talking about it, the first question you always get is, what are you going to pay me? What percent of UPB?
Yeah.
Well, if it depends on if you sold it to a lousy borrower at a low rate on a long term, what do you think you're going to get?
Yeah.
Right. But if you want to know, it's like, well, how do I write it if I want 95 cents on the dollar? It's like, so, there's a way to learn from all these people. I do want to say there's a lot of good stuff on social media, but there's a lot of stuff that's not accurate either. So back to my trust but verify. Make sure you're getting advice from somebody that knows what they're doing and not just some hot sports opinion in some Facebook chat.
Yeah. It's amazing. Me and Nathan should just do an episode on the craziest stuff we've seen. We've seen people, I hate to comment about people, but people who are new to the space and not using servicers, who are not putting in, using the PITI as a fixed amount on their note. And things like that, where there's no start date with paperwork. When people are doing those kind of things, that's your first problem, right? If you need to learn how to create that paper right. If you're not using a note servicer, you got to make sure you are. We had a couple people using apartments.com that we were just trying to educate them that doesn't equate into the note space like it does rental properties. And doing it right is the first step of doing this as a business versus a hobby.
I think that's a great point. If you're going to do it as a business, right, you got to do it right. You can't cut corners. I'm going to save $18 a month on this, or, I don't want to do that because the RMLO is going to charge me $900 to create the documents correctly. Well, if you create a bad note, you're going to get a bad price, or when you go to foreclose on it, you're going to have an issue.
Yeah.
And you don't want to be on anybody's radar of creating notes that are not enforceable or are not in compliance, because Dave may look good in orange, but not a lot of us want to be in an orange. So I'm just saying.
Well said, Bob. Well said.
A one-page note probably is not going to be sufficient when it comes to
Yeah, make sure your documents have thorough information, have a start date, your interest rate, your P&I should be separate from your tax and insurance. That number should adjust. You should have in there that the borrower will be notified that the escrow amount will adjust as the years go on, that you actually have an interest rate in there, and that you'll be licensed servicing it. I encourage you, those who are creating these, make sure you use the borrower to pay the servicing fee. You can do that. I encourage you to look at that, because this helps us as note buyers give you a higher rate. We don't have to subtract that from our monthly fee. So the idea is who those are creating it. So I love it. Nathan, I'll let you finalize this interview with our. We don't have a big, catchy, famous final last question.
I'm always curious. We've got people that come on that have different experiences that we do, and certainly it's not often that we have somebody with such a wealth of knowledge and experience. So, having been through everything you've seen and been through all the experiences you have, what's your crystal ball? What do you see happening down the road here? Where's the note game heading?
Well, I could take the easy way out and say if I had a crystal ball, I wouldn't be on here with you guys, right? Wow, that's great. I think we're in for a good run. I mean, whether it's the NPL space or the performing loan space and the ability to pivot, because I don't see the market changing for the better as far as lower interest rates and so forth. And there's going to be levers pulled on people that are going to have to liquidate and are going to have to recapitalize to some extent. And if you're sitting, look, the key to the note business is always being able to match deal flow and capital, right? There's going to be people watching today that got all the money and can't find a deal, and get people that got all the deals and they ain't got no money. Well, come to Note Expo and find somebody to make the match. But I still think there's going to be some NPL product. People are going to realize you can't always sell them for 90 cents on the dollar. People are, a year ago, real estate was on fire everywhere and they're just, going to ride it to the end. Well, that's not the case anymore. And I think there's going to be some pressure. I'm always skeptical in presidential election years because there's all kinds of voodoo math going on out there as far as what's really happening, and this is great, this isn't great, and so forth. But it does present opportunities because people get nervous.
Sure.
Be ready to pivot and have money ready. And look, if you're sitting on capital, either give it back to your investor, but don't pay stupid prices because you don't want dry capital sitting there costing you. I'd rather give money back to investors than make a stupid trade outside of my financial model, because it's like, if I don't do a deal, I'm not gonna have any loans in my portfolio. I've seen people make stupid trades, overpay for loans because they just felt like they needed to do that. Not really a direct answer, but crystal ball, Nathan, I think we're going to see some good product 2020.
Well said, Bob. I think a lot of people don't remember what 05 looked like. Everyone was like, oh, we got to get deals. The real estate's never going to bubble up. And those who did a deal just to be in a deal realize how bad of a decision it is just to get into a deal. If you're 04, 05 and you went back to that self, what would you told yourself to do with that capital, or anyone to do with the capital? You were told, just put it back in the bank, hold off for a little while because things are going to be on sale. And I think we're agreement that money will be well used when this market, when it happens. That's
and your investor is going to be, they may be disappointed their money didn't get, deployed. But if they know you're looking out for them and you're going to, hey, look, this is our model and this is what we're doing, they don't want you making a bad trade with their capital either.
Right.
So, in our capital fund, it's our money to spend, but it's their money they invested, and they trust us to make good investments for them. And if there's not a good deal right now and I have to return capital, we do that. And that's just always, been my philosophy.
Absolutely. So for those that don't know, and we'll put on the page and link it on stuff. Wayne Garrett, which you guys know very well, will be actually our next guest in a few weeks. So stay tuned with that. But Bob, I appreciate it, man. I'll be seeing you in about a month. I'm ecstatic to be seeing you guys and spending my weekend with networking and meeting new and old friends. It's great. Looking forward to it.
Well, I know there's people on here that were on the fence whether or not to come to Note Expo, but now that they know you're going to be there, I'm going to pull up my registrations and just watch them tick up all afternoon.
Absolutely.
Now that they know you're going to be there.
Absolutely.
So I look forward to seeing you guys.
Yeah, absolutely. So guys, make sure I'll put the link back in the chat. Make sure you get on there. If you want Bob's information, go to the link there as well. We look forward to seeing everyone there. Bob, hold on for after hours and take care, everyone. Have a great weekend, everyone.
Thanks, everybody.